All right. Again, Happy New Year to you all. So we'll start the session now with the general financial product advice warning. NP Financials Pty Ltd, LP Financials or NPF advises all service recipients of the following. This information is provided only on general financial product advice. This is only educational in nature. Trading securities, derivatives, CFDs, foreign exchange contracts can be risky and is not suitable for all. So I'll give some more moments to go through this and then we'll start the session. Alright, now that you have gone through this, we'll start the session. New year and new, probably we'll start something new, but I'll take all your questions here and then Sri is asking, could you confirm you can hear me? Sri, you need to speak and then I can see, I can tell you whether I can hear you or not. Can you speak, Sri? Please come to close to the mic and then speak. As of now I cannot hear you, so you have to unmute your mic. You have to unmute your mic and then speak near to the mic. Okay, so please come near to the mic and unmute. Alright, so we'll start with the for example, let's do that with till I get your theme today. Please give me a theme, anything and everything, whatever you want to learn. For example, it can be relative divergence, it can be anything and anything and everything. Okay, so it can be turning point, it can be crack and snapback. For last 3 months we have tried to see choose our topics and then discuss, but today probably I'll wait for your favorite topic you want us to discuss. All right, so first of all, let me congratulate one of our students here who has done a good job in commodity trading, and the best job he has done. I'm not quoting the numbers of dollar he has gained or lost. What I am saying that he has hanged on to the trade, and that is the part which I like most. You need to hang on to the trade when market is giving. So for example, in front of us, no matter how many days, so in front of us there was a commodity trade signal for natural gas here on 17th of, I think this was the first one, and this is the first one not triggered. This is the first one not triggered, but it actually got triggered here, and this will take this one as a first signal to consider going long. This is the first 17th September, and then this signal opposite did not trigger. Those of you who have done the commodity trading know, because this minus the ESD did not happen. Similarly, this one 11th of October did not trigger on the lower side, because the ESD amount to that side that time was 46, as you can see, and then the low here was only 30. So this fellow did not trigger. So if it did not trigger, what we can do, actually we come here and then we can write down X. That means it did not trigger. It did not trigger. Whatever is your favorite color is, and whatever is your this thing, you can do this and make it set as default configuration. Yeah, so this did not trigger and this did not trigger. So you know, when you have taken this one, when you have taken this one, you can write long. You have taken, when you have taken this one, there was one thread which did not trigger, there was another thread which did not trigger, and from this date till the one which got trigger is this one, 22nd of November. So from this date 17th of September till 22nd of November. So you have to actually hang on to the trade. So how many days and how much pips? So on 17th of September, high plus 36, which is 9 plus 36 45, somewhere here. So 45, let's draw a line so that I can show you what to be done here. So this is 45 because 09 plus 36 is 45. So let us make it 45 and then make it possibly green because we are going long, and make it thickest one. All right. So this is the hypothetical sample signal or example sample signal, or whatever it is we call it. We have defined what is an hypothetical sample signal. So this is the hypothetical one, which was on 17th of September at 2945. So at 2945 our trade is triggered, and then our stop loss was this minus the 35. So 27, it is the same bar or the previous bar low? The low is the previous bar. So I also get confused sometimes, so I have a cheat sheet. Whenever I am confused, I just refer to that cheat sheet that will tell me commodity, whether it is same bar or previous bar. For shares, whether it is same bar, yeah, or shares. So if we can remember, then fine. If we cannot remember, just have this cheat sheet so that for stop loss you are not confused. 54, because this low is 2765 and this low is 2754. So 2754 minus 35 is the ESD. So 54 minus 35 is how much? 19, isn't it? So I'll copy this and then paste it here at 19. So our stop loss is at 19, 2719. 2719 is our stop loss. We'll change the color of the stop loss so that this is the stop loss and the green color is the entry here, 45, and we hang on to the trade. And what we can do while we are hanging on, we can go bar by bar so that it will help us in future. This type of trades, and every trade will come and go. Whether we are trading doesn't matter. Market does not care whether anyone is trading or not. Mr. Market will give us every day a price and ask us, you want to take it for buying or you want to sell it. That's it. So this is a buy signal, and we bought the market here at 2945, and our stop loss was here at 2719. So our pending order is here 2945. So those of you who are starting the day before 9 o'clock or even 7 o'clock, actually coming back, going to bed, everyone of us is going to bed, that's for sure. So before going to bed, you can see this price, and this price was 2909 plus 3645. So we place the order, and market is open because commodity market, most of the market are open in the American session. Yeah, our bedtime is American session start time. So we enter at 45, we would give a pending order at 45 on this date, which is Tuesday after the close, that is 19th of September evening, and this fellow got triggered either on 19th or 20th of September. Okay, so we are in the trade blue bar, bullish bar, we are going long, so fine, bullish bar fine, bullish bar fine, bearish bar. So our job should be bearish bar minus ESD, which is 37, to put the profit target here or move the stop loss from here to here. So whatever you prefer, doesn't matter. So this minus 64 minus 37 is 27. So we move the stop loss to 27. So let's make this to 27. So our initial stop loss was 19, then our stop loss here is 27, and we'll am I doing correct? No, 3, it is 2968 minus 37 is 29. Yeah, that was mistake, 2927. So I'll make it 29. Yeah, So this is our so if this trade is going against us, we'll maximum lose from this bar to this bar, which is 17.3 pips. So if you are putting $1 a pip, so you will lose $17. If you are putting $100 a pip, so you will lose 1,700. If you are putting $10 a pip, the loss cost of business in this trade would be $173. Okay. All right. So next day, so we have our stop loss here, and next day market did not touch our stop loss. We did not reverse. Nothing happened. So bullish bar, bullish bar, bullish bar, no problem. This is bearish bar, and this is a signal here to go short. So low 3125 minus 43. So 3125 minus 43 is 87. 3087. Yeah. So we'll move the stop loss to 3087. If you are not with me, if you are not understanding, let me know. I'm going slow. So if this trade comes to 30, if this price at the end of Tuesday morning, because Friday bar closes on Tuesday morning, yeah, depending on the open and close time of this market. Commodity market is unlike Forex market, is not 24/7. So this market opens, and some commodities are 24/7. For example, like gold is 24/7, crude oil is 24/7, natural gas is almost there, but some like high grade copper and live cattle, they are rough rice, sugar, they are not 24/7. So our stop and go short. To go short here, we will place an order at 3087, in which we will book a profit if price is coming this point. If the price is coming to that point, we will book a profit of 145 pips. So depending on your dollar per pip, you will gain guaranteed gain here 145 or 1445 or 14,460, depending on the dollar value you are investing on this. All right. So far so good. Any question? Anyone having any question? All right. No question so far. Okay. So we'll go to the next bar. We are doing bar by bar. So this is a bullish bar, beautiful. We are going long, beautiful. Bullish bar, but this is a bearish bar, and there is a reversal signal here. So the low of that bearish bar is 3170 minus 46. So 3171 minus 46, 3170 minus 45 is 25. So 25. So we'll move this to 25. 3 1. We are protecting the profit, and now our profit has gone up from 0 to 184 pips. Yeah. So if you are having $10, that is 1,840. If you are $100, that is 18,400. If you have $1, that is 184. Okay, this is how the standard lot, mini lot works. Okay, so we are putting a stop. We have moved the take profit target to here, and we are putting a short order if and when market comes to 3125. Our trades which was taken here on 2945 will be closed with 180, and then we'll go short. We don't know. Let's see. All right. So nothing happened. So bullish bar, then bearish. Then we will not move the stop loss, because our initial stop loss would be here. So we'll not put the stop loss here minus. So don't do that mistake, because if we are going short, we are going short here, not on that bar. Alright, so our stop loss, our take profit target is 3125. So market is playing around that point. No worries, we'll hang on to our 3125. So 3125 is not hit. So from this point to this point, there are 22 days. 22 days, market is in a range for 22 days. Nothing doing. Yeah, it is not doing anything. Don't think much. Don't do much. Just follow the market. So if you want, you can you can join these lines. I don't do much these lines nowadays, because I blindly follow market. and this is a falling wedge in an uptrend. So probably if that wedge is broken, that will go up. So that much you can mentally see to hang on to the trade. So we are still on 3125, and we got saved here very close, and the market price came to 3134. 3134, 3125, there was 9 pips difference, and the spread of stop natural gas is 3 pips, if you remember. So we are very good. We are not hit by the reversal signal here. So we are still hanging on. Wow! On this date, there was a break, and this is a breakout gap, because if you draw these lines, I'm just joining peak to peak. You can do that. So I have joined 3 peaks to peaks, and you can also do that for 4. I have joined 4 peaks to peaks, and this is a breakout gap. So you will immediately understand that this is a breakout gap. This is a breakout gap, yeah, because it has broken our 4 lines. That's why it is a breakout gap. And you can so this did not trigger, this did not trigger, that's fine. Yeah, and we survived here, that's fine. Okay, so this is a breakout gap, and there was a humongous jump when our trade from this point to 45 to this point was 355 pips on 2nd of November. On this next day, 4th of November, it went up from this close of 355 to 607, almost double. In one day, the profit actually doubled from 355 to 605. Very good. We are good. Don't get panic. Don't get panic on this R2. This is R2, R1. As I told you, commodity market does not actually work that way. So whatever the R2 and R1 and R3, don't get much bothered about it, because they will come and go. So price actually played somewhere here, but we did not follow commodity R2, R3. We follow that in Forex. So now it broke R2 with a breakout gap, and it got stuck at the R2. Yeah, let it get stuck. Will not do anything. Okay. So if you want, you can ask me another question. So when we go long here on 17th of September, yeah, are you following? Yeah. 17th of September, can I add a position here? So yes, the answer is yes. So you can add a position here. You are in profit, because Anamrita is saying you are in profit. So what is your profit? From this point of 45 to this point, 339 pips profit. So we take another trade here, and our trade would be 3305 plus 45, so 3350. So we'll take another trade, and we'll copy. We are doing this virtually, so we have to copy this. We'll place 3350, 3350 somewhere here, so we'll make it correct. 3350. So we are taking another trade on this date. We are putting pending order for this trade to trigger at 3350. So we have one trade here, we have two trades here. So the best place to write down is the chart. So one long there and two long there. Yeah. So second long here. Second long here. Second long is at 50, and our stop loss would be this minus. So our stop loss for that trade would be 3125 minus 43. So 3125 is 87. So our stop loss for that trade, for this trade, would be 87. So somewhere here. So we'll make it correct. This is our second trade, and our stop loss is 87, and this is our second trade. We'll make it dot dot. All right. So these two trades are running now. One at a profit, and this is at a trigger point. And this dot dot is the stop loss for this one, second one. Yeah. Clear? Any question so far? Sri is asking, between 2nd and 4th November, I can't see the gap on my 2-day chart. Maybe you are having a Sunday bar open. You are seeing a gap? No? So let's match the um, uh, I am using $1 natural gas $1 contract. You are also using a $1 contract. Yeah. All right. So now to take that question, so first thing you need to see whether you are seeing $10 contract or for $9 contract or $1 contract. So we are doing $1 contract, right? Next we will go and make sure that this is 2 days. Yeah. This is 2 days. All right. Next, the only difference can be either me or you. Someone is having Sunday bar on. So let's see whose Sunday bar is on. Nothing wrong in that. If you are following that, that is fine. So commodity CBOT display weekend data is off. So if you follow me, go to options. Let's match that, and then go to platform options. Yeah, Sri and Onamrito, please do this with me. Platform options, and then go to time zones and trading hours. If you click on the time zones, the first one would be probably commodity CBOT. If you click commodity CBOT, you need to see weekend data. Display weekend data, yes or no? No? No. Then go to commodities energy. Then display weekend data is yes or no? Ah. So Anamrita was having yes there and we are having no there. That's why there is a mismatch. Sri, since I cannot hear you, you have to write back. Okay, Sri, if you are with me, please write back. She is saying I have microphone problem. Okay, no worries, just write it down. Okay, so next question, Sri, what was your selection on the display weekend data for energy? Because natural gas falls under energy, like crude oil falls under energy. So please take that out, display weekend data. Yeah, and then go to the since we are doing this, go to the metal, commodities metal, and make sure that display the weekend data is off, and commodities rates, and make sure that display weekend data is off, and apply changes. You have to apply the changes there. And one more last thing what you have to do is futures CFDA. So please click on futures CFDA, because brokers sometimes some offerings of the instrument, they consider that as a CFD, contract for difference. CFDA is actually contract for difference actual, and then the other one is the futures. So futures CFDA should be display weekend data. So these are the 4 settings. Yeah. So if we have done that 4 settings, then I would hope that you would get a gap here. I'll wait for your confirmation. Sri, you need to write it. Write it back. Did you follow me or should I repeat? Followed you and the gap is still not there. Yeah, then you close the platform and then reopen. Okay, Sri is also doing same thing. He is closing the platform and reopening it. I have experience through many different platforms from the same broker, because we trade, many of us trade, but I have experienced the broker price across clients can vary, and so that can also be one reason. Okay, so I'll wait for both of you, Anamitra and Sri, to be in the same page as us and start the platform, because we have saved the, and before starting I hope you must have saved it. Yeah, file save. You must save it, otherwise these changes will not be saved. You must do file save and then quit. We'll try to pick the today's theme can be we have 5 asset classes: Forex, commodities, shares, bonds, indices. Now sixth asset classes, cryptocurrency. Although that is a currency, but that is a virtual currency. That's why that's a different asset class. So sixth asset class. Got it? Got the gap? Yeah. So Anamito has got the gap. Now I'll wait for the Sri Utagi's. So that gap which was there. Uh, these are the only three things. There is no rocket science here. Only a mismatch, misselection, or not misselection. Actually, can be a different selection of the display weekend data that can cause the variation. So initially on our Mitro and our chart was not matching, but after he followed our settings in the options, time zones, he can also see the breakout gap. That is fantastic. Yeah. So I'll wait for Sri Utagi's confirmation. No worries, Sri, take your time. Sri saying have saved the data, now initializing, not a problem. So we are running two trades. The first trade, which was at 45, now running at a positive value of 605 pips, and the second trade which got triggered here on 9th of October 3350 has a positive value of 195. So 195 plus 600 is 800. 803 pips. So in these two trades, one in 17 September and the another one is 7th October, we are running positive value of 805 pips. So depending on the pip value of $1, $10, $100, or even $1,000, big players actually can place $1,000. So it will be a multiple of 803 multiplied by 1 or 10 or 100 or 1000, whatever it is. So Sri saying, brilliant sir, I can see the gap. I did nothing. You actually did everything. We just matched our setups with your setups. Yeah. So if from time to time you can go to check between your setups and our setups. For commodities, you have to go to CBOT, take that out, display in weekend data, energy, take that out, metal, take that out, and rates, take that out, and the last one is futures CFDA, take that out. Yeah, futures CFDA, and make sure that futures CFDA is taken out. If you want to know what is CFDA, actually you can Google it. I think CFD is contract for difference. So you can Google knows everything, and now we are there having a Google Home, so you can actually say, okay Google, what is futures CFDA, and Google will tell you something. Okay Google, what is futures CFDA?
According to $sense.sg, futures, contracts for difference and daily leverage certificates are different ways for investors and traders to gain exposure to price fluctuations of stocks, commodities and other asset types, without having to buy these assets outright.
Thank you. Yeah, that was not me, that was Google Home. You can actually download in your Android or Apple phone, and you just say, hey Google or okay Google, and ask anything and everything. So knowledge is not a problem now. Knowledge is in your pocket. Only thing is the application. Google will not come and place the trade for you. But Google will help you understand what is CFDA. Thanks Google. Thanks to actually Google does nothing. Google actually takes the data from for downloading this. You have to go to Google Play Store, and then right there Google Home. Google Home me. In this new year, my son has given me a beautiful gift, Google Home Mini, and that is the same thing as Google Home, but you can we have now many Google Homes at office, at trading room, at home, and we just ask questions and Google answers that questions. You don't have to write now. Google has come out in Google Docs. Those of you who are using Google Docs, Google has come out a voice dictation, so you don't have to write, you don't have to type. You just dictate and it will type it everything for you. And even with our accent, good or bad, we don't know Indian accents or whatever, Sri Lankan or Russian or British or American or Australian. Actually, Google understands every bit of it. 5 years back, when Google started this voice recognition, it was horrible, but now it is fantastic to the power infinity. Even it understands my English, unbelievable. Right. So that was future CFD according to Google. All right, so any questions on Google Home? Sri saying, please can you list all the instruments to tick? All the instruments to tick. For commodity, 8 instruments are there: CL, HG, LC, NG, OJ, RR, SB, SM. No, not SM, XAU. So these are the 8 instruments. I don't know what do you mean by instruments to tick. There is no instrument to tick. I think you are asking what are options to tick. So you have to time zones. You have to go to commodity CBOT. I am repeating this for Sri. Commodity CBOT. You can tick use trading hours of this market from 0000, and you can tick if I am answering your question correctly, because you have asked what to tick. There is no tick mark here. There is a radio button. When there is a circle, they are called radio button. When there is a box, they are called check boxes. Radio button, you can only choose one, but if there are multiple check boxes, you can select multiple check boxes. So for commodity CBOT, do not tick display weekend data. Commodities NSG, do not tick display weekend data. Same thing commodities metal, same thing commodities rate, and same thing future CFDA. To make it simple, one and all, take this out. Just take 5 minutes, select one by one. Even if you are not doing cryptocurrencies, you just take them out. Just take them out. Just take them out. Yeah. So it will help you. Alright, did I answer your question? Just previous CBOT. Previous CBOT. Please complete your questions. I think future CBOT. Alright, Sri is saying all good. Okay, fantastic. Brilliant. All good. Okay, so now we had 2 trades, 803 per. Now those of you who are interested can put a third trade here, because we are running at 803. So those of you who's actually the portfolio risk allowing you to take a trade. I am discussing a virtual scenario. I am discussing a hypothetical scenario. So I will place the third trade hypothetically. So this is third trade. Third long, because there is a signal here. So the third long would be 3578 plus 56. How much is that? 3578 plus 56 is 24, isn't it? 3624. If I am doing wrong, please tell me. 3624. So copy this and place the trade 3624. So our third trade would be 3624. That's the beauty of commodities and shares. So and if triggered, let's see the trigger, and then we'll put the stop loss also. Not yet. Now triggered. So our stop loss would be, for this trade, our stop loss would be previous low, which is this one, minus 53. So 72 minus 53 is how much? 17. 19. Isn't it? Huh? 19. Yes, you are right. 3119. So I'll put 3119 here. 3119. Thank you, Anamitra. 3119, and do it dot dot. So the dot dot is the third stop loss. and I'll match that. So this is the third entry, show dot dot, and this is the first entry and this is the second entry. Now you can match between the firm line, this is the firm first one, and this is the stop take profit, and this is the second trade here, and this dash dash is the second, and this is the third trade, and this is the third dash dash here. Okay, so now on that day which got triggered here, we are running 3 trades now, one from 45 to 780. So this is 780, and the second one is from here, this is 370. 780 plus 370 is 1150, isn't it? 1150, and the third one got triggered here with 100, 1250. So we are running 3 trades with 1250 pips in positive. So let's do, wow, bullish. This is bearish, but we will not put anything because there is no reversal signal. But those of you who are actually intelligent, at 5000 you should see what has happened previously at 5000. Yeah, so this is a big number, 5000. So our advice should be go to weekly or monthly and then see what has 5000 done for this instrument. Alright, this is monthly chart, and the previous resistance was 4544. So we'll make it red. Yeah, that was in 2015. Yeah, 2014, 2014 November. Yeah? And then the next one, we'll copy this. We are doing actually this one here is 4886, peak to peak. Yeah, so this is a peak, this is a peak, and then this is a peak, 6943. So when we are here, next bar, when we are here, we know that there is 4544 and 4886 can be resistance. So we go there. So these are the resistances, 4544 and 4886. So that has come from the monthly. So if you are a little bit trading for some time now, you would probably watch very closely, maybe 4-hour chart or 1-hour chart or whatever 12-hour chart, to make sure that you are not losing or giving money to the bank, to the broker. So 4886. So on that date, you can do 2-3 things. You can just take your profit at 4886, or you can see the 1-hour chart on 14th of November or 4-hour chart. So let's go to 14th of November, 1-hour chart. 14th of November. How to handle this? Yeah. So 14th of November. So December. December. Fourteenth of November. Yeah. So I'll make this one more. So it was only 185 data. So 14th of November was not coming. So we'll go to 14th of November straight. So this is 30th of October. 16th of November. My dear friend, this is 14th of November. Alright. So this is 14th of November in a 1-hour chart, and we can see a double top there at a resistance. How good is that? So we knew the resistance from the monthly chart, and now we see a double top, A class double top with the resistance of monthly. This is resistance, if you can remember.
You have to see the bar after that to see a double top.
Or you have to wait for this low to be taken out. Whatever is your, I would prefer any structural change.
Because you don't know whether it's a double top or zero.
No. Yes. Anamita is saying whether to know this is my mistake. We need to see this second. Yeah, this is double top. Now it is double top. So that was, he was correct. Yeah, thank you. And now you can move your stop loss to or take profit at this point. 4763. Just give the spread, which is 3 pips. 4760 you should be out. 4760 your all trades should get out at 4760. Don't hope to go up to 5000, then it will be a problem. If it goes, that's fine, but we have our profit now 4760, and we are out here at 4760. So this is how you can manage your trades, provided you are given you are given by the market a beautiful opportunity like this fellow here. 4760 we got out on that day. $4760. So our take profit target now is at, so we booked our profit at 4760, 4760. So all our trades are now closed, and we are converting this to from paper money to realized money. So now let's see how much money we got. For the first trade, from this 45 to this, it is 1823. For second trade, from 3350 to this is 4763, and from the next one, from this point to this is 1132. So first one is 1823. So just see how much we got here. You can ask Google to add. Let's see. Let's ask Google to add. Okay, Google, add 18231412.
The answer is 3.125.
What? I did not complete. All right. Okay. Okay, Google, please add 1823 plus 1412 plus 1132.
4367.
4367. Google could not answer. I don't know what. Google failed. Onamitra says how much?
4367.
4367. Brilliant. So in 3 trades in 2 months, because our first trade was on this one here, 17th of September. We closed the trade on 14th of November. So that is almost 2 months. We got 4,700 odd pips. Yeah. So if you have put $1, that is that much dollar. If you have put $10, that is 47,000. Yeah. Entire education value you have recovered in this one instruments 3 trade, because we did not do anything. Market did everything. This type of situation will repeat again and again and again and again. Don't worry. Only follow what we did. Okay. Now the student which I was referring to took this short trade. Okay, I'll delete this. Any question here on the trade discussion we did so far? Sri is asking, can we consider that as RD? No, no relative divergence there, because the second top was on 1 hour was also outside the Bollinger Band. So if you see that, that was not a relative divergence, because for definition of real relative divergence, the second top has to be below the Bollinger Band. Rosemary says no questions, very helpful. Thank you, Rosemary. She says okay, agree. Beautiful, excellent. All right. So we'll now see the same. Those of you who have traded here 5,000, I don't know, but we'll go as per our signal. Okay. It is possible to recover entire year cost of business in one of these types of trades, as you saw. 47,000 is not a bad number. All right. So we close the trade. So no, don't get confused or don't get bothered about, oh, this is a long trade and we'll only go long and so on and so forth. Looking for something bad? Yeah? Oh, what?
That's okay. I'll take it. It's fine.
আমি তাকে বলছি
No, no, it's okay.
একটা গ্লাস এনে দেবে Aminza, if you don't mind একটা বটল প্লিজ দেবে গো লাস্ট ড্রয়ারে আছে প্লিজ থ্যাংক ইউ okay. So we'll take 1 minute for drinking water. All right, so we are back. All right, don't get too much bothered about the technical, and of course you can, but that's so for example, if you draw the channel from here to here, or if you got a break up, if you have to wait for a trend line, these are very fast moving markets, so that's why I don't encourage you to stick on to your understanding that this is the uptrending market and this will never go long or short, whatever market can do and will do whatever it does. So our job is to follow the market, to be market chameleon. So what you can do, you can take this standard deviation channel, and this is the last peak, sorry, last drop. Add this last drop to last peak to have a channel, so that the break of the channel from this point can be a downside. All right, but if you are not going to the 1 hour chart and closing the trade at that point, you have to close the trade, nothing has happened yet. So there was another exhaustion gap here, if you can see here. Now you are having the gaps. So that gap was actually breakout gap, and this gap can be a possible exhaustion gap. Yeah, so what you have to do, you have to write here breakout gap. This writing is very helpful. Till date I actually write so that I don't forget, because it is easy to forget. And this is a exhaustion gap. Exhaustion gap, yeah. All right, so now that you know, so everything is happening on top of the Bollinger. If you are that is this is the problem, or advantage disadvantage. Everything is having disadvantage disadvantage. This is the disadvantage of not allowing market to play. For example, if we consider this as overbought because it has closed above, and we immediately close the trade with panic, then you will lose the entire thing. If you consider this as overbought and you close the trade because you say R3, R2 overbought, oh my god, this is collapse, this will collapse, but actually it went up. So we need to at least wait for the low minus the ESD, at least. So you wait here, low minus ESD, nothing happened. You wait here, low minus ESD, nothing happened. So now this is exhaustion gap. So if you have not booked there 4,716 or whatever it is, you must close the trade here with an exhaustion gap. Yeah, you close the trade here 4546. So instead of 4,000 pips, 4,700 pips, you get 4,500 pips. All right, so now we are waiting for a down signal. If it is there, we don't know, it can go up to 10,000, 20,000, 50,000. How do I know? I don't know, no one knows. All right, now here comes on 22nd of October, November. Those of you actually who has remembered this as a candlestick format, this is a hanging man. Yeah, so this fellow is a hanging man because it looks like a hammer, but it is at a resistance. So if you go to our book on candlestick, this will probably look like a all three are dozis. All these are dozis, but this is more of a dragonfly dozy or a hanging man. Not a very good example, but it is somehow. Alright, so that is just to touch your candlesticks, because that's what I say. Knowledge is not a problem. If you ask Google what is hanging man, she will tell you. But the application of knowledge is probably the best thing. What makes a champion. Alright, so alright, so now with a hanging man at 5,000 resistance, we will put the short trade 4146 low minus 111. Yep. So we'll put that. Let's put a virtual trade there. How much it is? 459 4116 minus 111. So it is 4035. So we'll go to 4035 and then draw a line. So we are now planning to go short because we have seen an exhaustion gap there. So Mr. Market is telling us, do you want me? I am giving you a price of 4,500, whatever it is. Would you like to buy me or sell me? We are agreeing according to our principle that we will sell you at 4035. So this is our sell price, and this is our stop loss. So 4861 plus 106, 4968. So this would be 4968. I am doing mentally. If I am doing mistake, please let me know. So this is a stop loss, so we'll change the color. Yeah, and this is our entry point. We change the color. We go and going short, so we'll make it red. Yeah, so we'll enter here at this point on 22nd, after 22nd of November, 4035. This fellow is 4037.5. Since this spread is 3, depending on a broker, the low would be 4036. Not yet. So we are not yet triggered. Yeah, this fellow will not trigger you. Nothing has triggered. So now you have a. If you remember our commodity book or manual, you can see if you are getting a better price, you can actually move this entry price. So we are getting a better price with a consecutive red signal. So we'll move the entry price from this minus ESD to this minus entry. So 4456 minus 123 is 4333. So we'll make this correct. 4333. Huh?
Yeah.
433. Huh?
4443.
4443. So now we are entering at 44. Is it correct?
Yeah.
No, 4456 minus 123. So it should be 4333. Yeah. So it should be 4333. So we are entering at 4333. Our stop loss is same there at 4968. If it is coming down, otherwise we are not entering. This is a better price for, yes. So on this date, actually we got triggered. See how by remembering you have to move the trade from here to here. That is important, isn't it? You saved a lot of money there because you were entering on this bar minus 111 at 4035. Now you gained 333 pips just by remembering that. If you forget, that order will be there and it will be triggered at a bad price. So now we are here. We got triggered. So we got trigger, red, gap. This gap is now a continuation gap. So we saw breakout gap, we saw exhaustion gap, and we are seeing a breakout gap with a continuation gap. So we'll write here continuation gap. Why continuation gap? Why not a breakout gap? Because it has not broken anything. That's why it is a continuation gap. Yeah. It has not broken anything. It is a continuation gap. So it is continuing. Okay, fine. We are now as of date with a gap. We got a fortunately gap here while going long. We got a fortunate gap here while going short. Yeah, beautiful. So now our trade, which is running from here, is at a profit of 797 on 16th of December. On 14th of December, it was 598. So if you remember, this gap actually doubled, but this is not so strong. So from 600 to 800, not bad, 200 pips. Yeah. So if you are running that trade, you are having 797 points, which can equivalent to $797 or $7,970 or $79,700, depending on how much you have invested. Alright, so now there is an opportunity to go long here and move the take profit target here. So we'll move the take profit target from here to this plus 134. Please tell me 3818 plus 134.
3952.
3952. So we'll make it 3952. So thank you. Now we have locked our profit from this point, entry point, to this point. If price is coming here, 390 points. Yeah. In the upside, we got 4,700 points. Now in the downside, we have locked 390. Let's see what happens. Fine. Bearish bar. Wow, bearish bar, no problem. Our stop is intact. Now we can enter at this point another trade. So if you remember, so that was our first trade. This did not trigger, so we'll put a cross mark here. Actually, this is our first short and this is our second short. So we are putting a second short here. Yeah. So we are putting a second short here. Our entry would be low 3255 minus 140.
3115.
3115. So we'll make it 3115 and we'll make it dash dash. And our stop loss would be, second higher high is this one, is 3846. Please, Anamita is doing all the maths for me. 3846 plus 135.
3981.
Thank you, 3981. So this is the dash dash. So this is our second stop loss. Yeah. So we are running two trades here. Second trade has not got trigger yet. It is pending at 3128. Wow, we got another continuation gap here. Now this is a breakout gap. Why this is a breakout gap? Because it has broken the supports here. If you see here closely, there was a support here. See this? There is support resistance. So the previous support has become a resistance. So now this is a breakout gap. So I'll copy this breakout gap and put it here and then make it as a breakout gap. This has broken the previous support resistance here. So there is a polarity change here. So those of you who are remembering all those candlestick discussion, so the polarity change is here. This is a breakout gap. So we saw a continuation gap and we saw a breakout gap. And both our trades are now running. The second trade is running with a profit of 219 pips and the first trade is running with a profit of 1386. Both put together is 2000 pips already. So in the long side we got 4700. In the short side market has given 2000. It is a V type reversal. It's very uncommon, but market has given what to do. If market is given, we are no one to ask question. So now we are here on the 3rd January 2019 and there is nothing happened here because we are short only. But if you want since this is a polarity change here, you can do two things. Just increase this January, make it January 8th. Yeah, so you can see, you can do three things. Wait for the bar to close above this support resistance and book profit, or just book the profit here plus 140, whatever you like. So what have you done? How have you managed? Where did you close the trade? Oh, no, I'm asking 4,900. So he took a trade at this point 4,900 because he saw the resistances, and one of our students took the trade at 4,900 dot, is it? 4,900, beautiful to the power infinity. So he sold the market right at the resistance of monthly, if you remember, 4,900, and your stop loss was 200 points above that. So I'll put the stop loss for him 5,100. So I'll make it 5,100. So his trade was 4,900 short, 5,100 stop loss, and you close the trade.
2940.
And he closed the trade at 2940. 2940. Sorry, I'll copy this and make it 2940. 2940. And since that is green dollar, I'll make it green. So in that trade he got from 4,900 to almost 2,000 pips. Yep. So 2,000 pips, if you have taken $1 a pip, that is $2,000. If you have made $10 a pip, that is $20,000. The value of your share trading and commodity trading. Okay, now the question is, why did you close here? First of all, why did you enter here, or how did you enter at 4900? Now I am asking the question to the person who took this 490. Why did you enter here?
It has been the highest price in the last 3 years, and the chances of it going higher hasn't happened in 3 years. So it was reasonable to say if you can take a risk of 200 points and take it from there.
Alright, so just to repeat his answers, he said it is at the highest point in last 3 years, as I can show you. So he is referring to this this high, and then he is referring to this high, and then he is referring to this high. So he saw this 2014 April, September, November 2018, 15, 16, 17, 18, 4.5 years. So he saw the price at the highest point of 4 years, and he sorted the market at 490. That is a brilliant to the power infinity understanding. Yeah, that was good. That was very good. All right, and then how did you manage the trade from here?
I just followed the down cycles till we came down to the support there, and I had to change it from paper money to real money because the year was ending as well.
So just to repeat his answer, he said he followed bar by bar discussion what we did, and he pocketed the profit at the end of the year, which was 31st of December at 2940, grabbing 2000 pips from that. Brilliant, excellent performance, excellent, brilliant, beautiful, brilliant, very good. So any questions here, or any questions to the person who took this trade? Sri saying congratulations, well done. Rosemary saying excellent, brilliant, very good. So any other questions? Anyone want to talk? Just unmute and talk. So in the upside we got 3 trades and we profited 4,700 pips, 16. In the downside we got 2 trades, and if we have followed his rule of closing at the end of the year, we got 2000 pips. So 4716 plus 2000, 6716 from one instrument. Questions? No questions? Alright. Now tell me, I'll give you 2-3 minutes. Think about it and tell me anything which you want to know, any topic you want me to cover in next half. So I'll repeat what we covered. We have covered gaps, three types of gaps: breakout gaps, continuation gaps, exhaustion gaps. We covered in V-type reversal in one of the instrument called natural gas. We saw bar by bar management of the trade. We saw scaling in or pyramiding or adding positions in the trade. We saw how to go to the lower time frame near the monthly resistance to get benefit. We also shared one of our students' understanding of how he managed, why he entered the trade, and how he got 2000 pips from that instrument. All right. So, if crude oil, Sri Utagi is asking trade size calculation for crude oil. What is the question? Trade size calculation for crude oil. Okay, now let's go to the crude oil. This is another brilliant example. Oh my goodness. What a trade. Alright, so trade size calculation. Do you have your journal which you want to share, Sri, or you want me to open our sample journal and take it from there? Alright, Sri is asking one question on trade size calculation. Let's see the trade size calculation for crude oil. Crude oil has a brilliant run like natural gas. Alright, so let us open sample trade journal and make it a little bit smaller and take this example. So crude oil gave us opportunity as 11th of October in front of you. Yeah. So 11th of October crude oil gave us an opportunity to go short, and Sri is asking how to do the trade size calculation. So we have to write 11th of October. So we'll go there and write 11th of October 10-11-18. So that is 11th of October, and that it was Thursday. We can write down, and then trade type. This is actually doesn't 1% trade. Oh, this is actually not required, so we can hide this. We should actually use a commodity journal, and then here the commodity is CL. We are using $1 contract, Australian dollar, isn't it? Yeah, $1 Australian contract. So we'll write CLAUD. Now it will do all this type of. Okay, so commodity. Let me search commodity journal. I have shared with you. Yeah, this is the one. Got it. So that was 11th of. I'll make it bigger. Can you all see? Yeah. So instrument is CL, and the date was 11th of October. Sorry, 18. And then we are going short. ESD was ESD was 102, so we'll go there 102. And previous high low was this one here. No, this is asking high low. This is not previous. This is today's low. We have to enter the low. The low is 7040. And previous high low. It is asking previous high low. It is 7519. So far so good. Everyone can see that? Yeah. So commodity CL, and then date, and then short, and then ESD 102. The bar which we are going low is 7042. Previous high low is 7519, and the size here is 0.81. Depending on R2 divided by K2, depending on the stop position is 615, because 7500 minus 7000 distance, 7553 minus, we have a $50,000 account for in this sample trade. 50,000 is, and 1% is 500, and that's why we are taking 0.81. So if your broker is not allowing to take 0.81, you have to take 1. You have to take 1. 1, put 1, and then when you are triggered at this price of 6938, close 0.19. So that is the trade size calculation, Sri Utagi. If your broker is allowing 0.81 in MT4, you can enter 0.81. Yeah, Sri is saying yes. Have you understood? Did I answer your question, Sri? It's pretty simple. 0.81 means how much one pip cost. That depends on the broker. So that can be 0.81 means it can be $8, it can be 81 dollar, depending on the broker. So what you have to do to make sure that you are actually taking the correct position size, as you have to demo trade. First you have to demo in the back testing or in the paper trading. Go and use your demo trading to if you go to the Go market and use a demo trade, you can actually do that. So what you have to do, and the best part is you can actually make it non-expiry. The demo trade will never expire. So if you go to N P Financials and go to events, and then go down. No, I think it is in about us. My son is redesigning this website, as you can see. He is having some time now. So start trading, you have to click on the start trading on the Go Markets, and then you can open a demo account. Yeah, so you can use in individuals, and then next, or you can use on trust and superannuation, whatever it is, and then you can give all this and open a demo account. So you have to open a demo account and then put this 0.81 to see how much is the value of that. It will depend on the broker to broker. There is no definite answer to that. So it can be $8, but you have to do that in a demo. Sri, have I answered your question? Could you please minimize? Sri says yes, thank you. Good, very good. Next question. Alright, let's complete this one because we have to exit this trade. So crude oil, so we are entering crude oil on 11th of the month, so we'll take that. Alright, so we are entering the trade here. 7040 minus 102, that was in our Excel sheet, we got that answer 6938. So we are entering at 6938. This one we'll do quickly because we have done previously natural gas. So we are entering at this point 6938, and our stop loss is 7553. So we do that 7553 here. 7553. So stop loss is there and we are going short. Alright, so now we got triggered here and the red signals still there, so no worries. This is a blue one, but the tree did not trigger, so our job is to write down this did not trigger. So put a cross here. The long did not trigger, we are in the short, and it broke everything. It broke the 200 here. If you can see here, it is 200 and it got broken here. If you are actually closing the trade here and thinking that it is a all sellers out the 200, that's a problem. You have to wait for the high to be taken out and close above. So this has to be taken out. This is 200, but this is the high. This high must be taken out, or this high must be taken out if it is closing above. This fellow closed below, brilliant. Then we wait for the low to be taken out, which happened here. Low got taken out here. So this high is not taken out. So if the high is not taken out, our job is to cross this. Cross means it was not successful. Yeah, this 200 was a failure in this example in front of us. Okay, then we are not having any blue signal, so we are hanging on to the trade. Brilliant, it is collapsing and there is no relative divergence here because both of them are outside. Both of them are outside, so there is no relative divergence. This one I am doing quick because you know what I am doing. Now there is a relative divergence here, which got confirmed here. Relative divergence confirmed with a turning point. If there is no turning point, there is no relative divergence. Till this point, there was no relative divergence. So those of you who has forgotten or trying to remember what is a relative divergence, on 30th of November there was no relative divergence, although this is a swing low. Why not? Can anyone answer me that question? On 30th of November, why this is not a relative divergence? it has lower low, and it is lower low within the Bollinger, and this is a swing low. One thing is missing out of the three things. Yeah. Now I'll give you 1 minute time to answer. So let's see our trade, how much profit it is running. It is running 1817, and we add one position here more, scale in. So we add one position here, and our entry point is low minus 6542 minus 106, 6436. So our entry point is 6436, and we'll make it dot dash dash. So this is our second entry point, and then let me see your answers. Not turning point. Yes, yes. Sri is saying inside bar, no turning point. Brilliant, excellent, excellent, very good. Sri, you have answered it correctly. So there is no turning point and inside bar. So we'll wait for a turning point and inside bar. This can be an exhaustion gap. So if you are drawing trend lines or channel line, whatever you prefer. So if you are drawing this channel line and make it a little bit tighter, so let's make it 0.5 or 0.3. Fibonacci is not a bad number, 0.382. Yeah, so you can see a break of that channel.
So now you have a break of a downtrend. So and you've got a blue histogram.
Yeah.
So even though the high has not been taken out, will you be in that as a long?
No, we'll place a long trade
Yeah.
to get triggered here.
Yeah, that's what I mean. You will put a long trade down. Yes.
So let's see, our long trade would be here at 5392 plus 127. So 545520, isn't it? 5520. It did not go up to 5520. So what we will do, we will do a cross here. There was no success here, and now we are at this point. We are at this point. So the trade which was running here and which was running here, can be closed. Running here can be closed here. So if you are closing the trade here, 2043 pips there, and the second one 1588 pips. So if you remember our trade idea section, we shared one sample example of crude oil, and that was on you have to agree to that. We go to trade outcome, we have to, and you have to agree to the terms and condition, financial services guide, trade idea, general advice, so on and so forth. The trade CL, this is our natural gas call which closed at 1100 pips, but our student got 2000 pips. He bet 200% better than us. In crude oil we got here 1990 pips, 1990 pips. That call was given on 11th of October, same date as this one, 11th of October. And in that trade, those of you who have taken that trade has got 1990 points, and depending on your trade size, it will be 1990 or 199 19,900 in one trade. So to close that trade, we'll be closing as per trade call in which we closed. We closed the trade at 7150.6954, I think. So if you are closing the trade right here, is this high to be taken out? This is a hammer. This is a good hammer. Those of you who are remembering candlestick, this is a wonderful hammer. This is a beautiful hammer outside the channel. So this plus 136. So we are exiting 4708 plus 136, 4708. So 4708 plus 136. So we are exiting at 48.44, and if you have taken $8 point or 80 cents a point, you got 3.4% here, 2094 pips, which is 1702 depending on 80 cents a pip. So if you have taken $8 a pip, you got 1720 17,000 if you have taken $10 a pip. So this is the trade size calculation, Sri Utagi. And did I answer your question on trade size calculation, Sri? Sri saying, please repeat how to draw channel lines. Please explain difference between standard deviation channel, standard error channel, and when to apply. Yes, I need to practice. Alright, Sri is asking, please repeat how to draw channel lines. It is simple. Let's draw channel lines to answer his question. Alright, so this is a monthly chart. Let's draw there, and then we'll go to 1-day chart and so on and so forth. Okay, so he has punched 3-4 questions in one. How to draw channel line. First answer his question, how to draw channel lines. Channel lines should be drawn from experience, depending on how much you have experience, but I will guide on that. First requirement is you have to see minimum 10 to 12 bars to draw a channel. So minimum 10 to 12 bars. So if this is a double bottom in front of you, remember this is a monthly chart. This is a double bottom in front of you. This is a trough, that is a trough, and this is a turning point, that was a turning point. So this is a double bottom, and count 8 bars, 1, 2, 3, 4. Doesn't matter whether it is 1 minute bar or 10 months bar or yearly bar. So what you have to do, go to this channel and go to the lowest point and then draw your channel to the date you are starting. So for example, if you are starting on the 1, 2, 3, 4, 5, 6, 7, 8. If you are starting 8th day here, your channel would look like this. Your channel would look like that on the 8th day or 8th bar, depending on time frame. So 8th bar. Now you are on the 9th bar. This is not a moving market because today market is closed. Otherwise the channel will automatically come here. That is the beauty. Channel will automatically come here. So on the 9th day, channel will look like this. I am doing bar by bar. On the 10th day, channel will automatically look like this. Next day, channel will look like this. Next day, channel will look like this. Next day, channel will automatically look like this, and next day channel will automatically look like this. So out of the beauty of channel is, if you are drawing from here to here, which is 13 bars from the 8th bar here, starting from the 8th bar. After 13 bar, for the first time it has closed below the channel line. So this is the first danger. Okay, so if this is the first danger, and it can be a possible reversal because the high is 7409 and here it is 73, so this can be a peak. So let's go to the next bar. So this is a peak. So if this is a peak and this close is below, then we'll wait to draw the, so this low was taken out and again retested here. So this, see, the beauty of this channel is the low is taken out here and the channel is retested there. Yeah, this is the beauty of that channel once it is broken. So this is where it is broken and it got retested there, and there is no looking back after that. So now what you have to do, I prefer the standard deviation channel for the downside, so I will draw from here to here now. The 4 bar channel is not good, so I'll go to weekly chart now, just to answer Sri's question. So I'll go to a weekly chart, and this was the point we were discussing, and my weekly chart would look like this. So if it is not touching the, to answer Sri Utagi's question, if it is not touching the high or the low, the channel is a mistake. So what you have to do, right click on that and reduce. It is 0.1, sorry, it is 1, now make it 0.5. Yes, 0.5 is a good one, or 0.618, whatever you prefer. If you prefer Fibonacci, make it 0.618, 0.618. Okay, yeah, this is good. Whatever you do, you have to make sure that it is touching. So for example, if you do 0.5 and in a weekly more than 8 bars from this date, which is, that's a good question, from this date, which is 1st of October, till this date, which is 31st of December, market has fallen more than 3000 pips, but for the first time it is breaking the channel here. For the first time it is breaking the channel here. This is the beauty. So for the first time it is breaking the channel there, and with a turning point. See, this is a turning point here. We need to see whether there was a support here previously. Let's go there and we can see the support here, where we got a double bottom. If you remember the monthly chart, double bottom. So this was the support in which crude oil got stuck. This was the support. So anyone who has bought this 4200, have you? You bought? Where did you buy? Okay. So he's letting us know. So this is how the channel lines are drawn, Sri Utagi. And this is how the channel lines automatically get adjusted unless and until you are forcing it. Supposing this is the running channel, but if you force the channel from here to here, it will look like that. And if you force the channel from here to here, it will look like that. For uptrend, I prefer this channel, which is standard error channel. For downtrend, I prefer this, which is standard deviation channel. Any questions, Sri? Did I answer your question? Standard deviation channel configuration, please. Configuration is, I prefer Fibonacci numbers. For up channel, I prefer 1.62, which is a standard error channel. And for down channel, I prefer 0.62. not 0.5, actually 0.618, which makes 0.62. But if it is not, if you are not happy, you can always change, make it 0.5.
4839.
4839. Our friend here bought oil at 4839. So let's see where 4839. 4839 here. 4839. He bought after covering your natural gas or before covering your natural gas?
No, after covering the natural.
So he covered his natural gas with 2000 points in advantage, and then he bought it here at 4839. So now let us know why you buy there. He bought it here. Yeah.
Because if you from the histogram and the volume, that's the first histogram, and there's a you go via after it's broken the long downtrend challenge, and the high has been taken out on the second bar.
Yeah. So what he is saying, he bought on this histogram, which was on 31st of December. This is 4793 plus 136. So the high was taken out. 4839 is the buy price there. Beautiful, excellent, brilliant. In last 12 months, I think, not I hope, but actually the fact is, all the month was positive. I'll publish this. So in December we got 300 pips in Aussie, 1100 pips in natural gas. In November we got 0, 6 and 0. If we remember last year 2017, November was the only month which we made negative in 12 months. But this month we this last year we could manage with a 6 pip profit in November. Alright. October 484 profit, 80 profit, 5 loss, 200 profit, 121 profit, 143 profit. So if you do that exercise in a month to month basis, let's see how it looks like. Any other trade you have taken apart from natural gas or crude oil in last 2-3 months?
That's in Forex, but not in shares.
Not in commodity.
Commodities and shares.
Yeah. He has taken, just to repeat his answer, those of you who can not hear him, he has taken Forex but not much in commodities apart from these two trades.
I've taken orange juice.
Orange juice also, we'll go to orange juice. So this is the,
That's still running.
just still running, so we'll go to orange juice. So just to show you our last year performance there, so we'll add the December figure as well. In December we got 1400 pips, lost nothing, 1400 pips, so 1400. So in December we got 1400, in November 6, in October we got 4254, September we got 9837, August we got 1787 from our, July was a negative minus 302, June was brilliant 2375, May 482, April 54, March 595, February 53, and January 169. So if I add this from 16 from January, if I add sum of January C to C27 to see last year performance from our trade idea is 20,710 pips just from our sample trade idea. So if you have invested $1 per trade idea which we have given, you would have got $20,710 from the sample trade idea. And if you have invested $10, that would be 200,000 from our trade idea section which is here in front of you. So 20,700 is a very big number, and that too from sample trade ideas. Yeah. So this month we could not avoid July, which was a negative 302 pips, but otherwise from January to December everything was fine. And this is how our trade idea is looking. We started with January and we are here now. How good is this one? We started with 6,200 and now we are at 22,000 or 24,000. So this is the advantage of being with us and hanging on to your trades. Alright, so next question. Orange juice. So we'll go orange juice. Rosemary is asking, do you have the calculation for Forex only? For if you are asking for the channels, no. Channels are across the asset classes. No matter, I don't understand what is this question is for. If you are asking for standard deviation channel or standard error channel, Rosemary, the calculation is the same. If you are asking for something else, sample trades. No, sample trades are, if you can go to our website and see sample trades, it will be all asset classes. We trade all the asset classes, so we give trade ideas in all the asset classes. So this is Forex, this is index, this is commodity, this is shares, this is index, shares, so on and so forth. Now next question is on orange juice, so we'll go to the orange juice. Tell me, what did you do? Orange juice.
I shorted the market on 4th of December.
So he has sorted the market on 4th of December. Orange juice. 4th of December. Wow. He has sorted the market with this signal at 4th of December.
And also if you draw
which is this one, yeah? Which you have drawn what?
If you draw a trend line from the 6th of August.
He has drawn a trend line from 6th of August. So 6th of August is this one here, yeah?
Yeah, and so if you draw that over to the swing high out there, it would have just crossed.
From 6th of August to this one, is it?
No, up there.
To this one?
Yeah, because before it was there, but since it broke that, then it became invalid. So you move that line up to there where you are now.
Yeah.
And then that's where it crosses the Bollinger Band as well, and the first histogram turns down.
Yeah.
The histogram is turned red at that.
Wow, this is a excellent trade, my dear friend, and he is applying all his study. So what he is doing? Wow, this is very good. This is brilliant. Okay, what he is telling, just to repeat his how he is seeing these brilliant trades, and he's almost picking the tops and bottoms like natural gas and oil and on orange juice. So what he did, he drew a trend line initially, just to repeat what he told in last 2-3 minutes to your benefit. He drew an initial trend line. I'll hide this section. From this peak to this peak, isn't it?
Yeah.
Correct me if I'm wrong.
Yeah.
But this got invalidated because it closed above and high was taken out.
That's right.
So when this got invalidated, you have to wait for the next peak to form, like this one here. So he corrected that trend line. He corrected this trend line from here to here. That's what you did, yeah?
Yeah.
So he got this new trend line, and this is a downtrend. So this is the brilliant. This is what I actually like. So he saw this downtrend, and then he saw this downtrend, and then he saw the first touch of the Bollinger in there, correct?
Yeah.
And then there is a reversal with a down signal here, histogram, and he picked this trade. He when he was taking this trade, he was not having any idea whether it will go up or down, isn't it? No one is having any idea. So he picked this trade here on the first touch of the Bollinger in a downtrend, which is one of our favorite. He picked that, and then he got triggered here on this one, and then is still holding it. Wow, huh? Wow. So he is still holding it from this point minus 162. So 14,300 somewhere here. 14,300. What is your entry point? 1 4.
He was to get 1410.
1410.
Yeah.
So his entry point was 1410. So he entered here at 1410 when it got trigger,
Yeah.
and then
12,1409.
at 1410 now it is 12,339. So it is 1,671 pips profit. Wow. So if we go and see the monthly chart or the weekly chart for this currency pair, for this instrument, New York Orange. So let's make this as monthly to see that first. Yeah, we have some time to go, isn't it? So this is a trend line which I have drawn here, and if it goes there, 11,400 is the next stop.
Yeah.
Do you have the same trend line?
Yeah.
Wow. So he is matching the trend line also, and his target is 11,400, and now the price of all this is brilliant, because if you are learning how to trade from us and then applying your learning, then we are the most happy person as well as you. So we have another 1,000 pips to go. He has already bagged 1,600. So for natural gas, you got some 2,700 pips. In oil, you got
Few.
2,000. And then in orange juice, you got 1,671.
That's on paper.
Oil, you have closed.
Oil, I have closed.
Natural gas, you have realized.
Closed, yes.
Oil, you have realized the profit.
Yeah.
And orange juice, you have not yet realized.
Paper.
And what is your criteria for? Okay, next question is, have you pyramid? Have you gone short again here on 18th of December?
I didn't, but I should have. But I did not.
He has not done one thing. That's fine. In three trades, he has got almost 7,000 pips. With $10 a pips, at least 70,000. With $1 pips, 7,000. But one opportunity probably which was presented by the market was pyramiding.
The short on the 18th of December.
Yeah, the short on the 18th of December was a brilliant one.
Yeah, the thing is, I was watching them because Christmas was coming and the
Yeah.
year was ending. You're thinking they will need to close all your trades anyway.
The new definition of low volatile, so called. I will close today's discussion with this. Do you have any other running trade? Okay. Do you have any other question? Otherwise, I'll make a statement, or not a statement. I'll actually prove something and then hang on. So no one is having any question. I'll give you 1 minute to answer to ask any questions before we. Uh, Sri says no question. Rosemary says no question. Okay. So now I will close the discussion with a funny things, which is a fact. Not a funny thing, but actually a funny fact. Till I am doing trading from 2005 till date, I hear the so-called low volatility during holiday period. Yeah, you must have heard that also. Everyone has heard that. Yeah. So now I'll define the low volatility, so-called low volatility. Those people who do nothing in trading, but just do random talking. Now I'll redefine in my next post what is low volatility. Yeah. All right. When they say don't trade. Yeah. All right. Okay. Unfortunately, I deleted everything. Yeah. Huh? Come again.
I said nobody told me that.
Nobody did.
That's why I'm probably trading.
Yeah. Yeah. All right. So this is the so-called low volatility trading during pre-Christmas and Christmas. This is a funny thing which I observed, and this is across instrument, across asset classes. This is on Christmas Eve, when all the banks are closed, when everyone is probably drinking, and the market moved from here to here, 105 pips in sterling. All right, so we write down 105 pips, 24th of December. How good is that? So 5th of December, we got 105 pips. Okay. Now let's see, 25th was a holiday. 26th, this is 26th, and from top to bottom, we got 90 pips. So which is almost 1% here, yeah. So 105 pips on 24th, and then 90 pips on 26th. 90 pips on 26th, just after the Christmas, when everyone is so-called low volatility. And the best part is on 31st. On 31st, market moved 135 pips. So this is the new definition of low volatility during holiday periods. So if a forex pair can do that, you can imagine what can happen in shares and commodities, which can move 10 times. So this is one sterling in front of you, and we can also see Aussie also. And you made a comment on Aussie, didn't you, Manamitro? He was doing operation and market moved some 300 pips. Unbelievable. All right. So this was the day he was referring to. This is 2nd of January, just after the 1st of January. On that day, the so-called low volatile market moved the highest, which is 215 pips. So 215 pips in Aussie dollar, I have probably never seen. That was on 02.01, 2nd of January. I have never seen. So these are the new things which is happening in in our cryptocurrencies days, in our sons and daughters era, which era I don't know. But a currency pair like Aussie, which moves 66 pips in a day for last 200 days. If you take an average of high minus low, average it out for 200 days, that is 66. For sterling it is 107. In one day on 2nd of January it moved 215 pips. So this is my new definition of low volatility. I cannot stop smiling, laughing. And those are the people who write and talk in TV and everywhere, don't trade low volatility. These are actually slap on their face. Unbelievable. So with that, I'll probably close my discussion. If you have any question, you have 1 minute. Sri says wonderful session. Thank you, Sri. Rosemary says thank you for interesting session. Thank you, Rosemary. Sri says thank you so much. No worries. And I hope Vinay and Selvan everyone enjoyed. And those of you who could not attend because of the holiday period, will be. Bino says thanks, Partha. So with this, we conclude the session. Thank you very much for your time. And then bye for now.